What is going on, investors? Hopefully guys are doing well out there. Happy Thanksgiving, happy Black Friday. And I know we're all happy that it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. And this week we have Meta Platforms' Mark Zuckerberg potentially leaving the company. We have Apple potentially buying a Major League Soccer club, and Tesla finally had some gains after several weeks of losses. But we kick things off like we always do with Meta Platforms. Start of the week at 111, essentially flat on the week, ending at about $111 per share. This is after earlier, I'm not exactly sure where these rumors came from, but CEO Mark Zuckerberg potentially stepping down next year were the rumors, but a Meta spokesperson came out and denied that speculation. We'll see how these materialize. Sometimes with these rumors, there is a little bit of fact mixed into that. We'll see how that materializes into next year, though. Meta's fitness app plans are going to take focus over the next couple of weeks. An FTC lawsuit is scheduled to go to trial in the first couple of weeks of December. This relates to a $400 million acquisition of an AR/VR fitness app that was developed for the Oculus platforms. Then Meta decided to purchase this. FTC's argument is that Meta is kind of being anti-competitive with that type of purchase, but they're also arguing that while Meta doesn't have a dominant product right now, that if they just continue to acquire products and apps that are made for the metaverse, they'll eventually monopolize that market. So this is not only a critical case for Meta in terms of maybe acquiring future apps and future games and other systems related to the Oculus, but it probably will start applying to other rulings as well. We'll see how the judge decides to rule in that. That is a critical case. Moving on to Apple, start of the week at 148. Like a lot of these stocks, everybody was just took the week off. This one also ended the week flat at 148. This is after earlier in the week, though, Apple slipped as a viral video showed that hundreds of workers protested at the Foxconn iPhone plant in China. This is obviously all related to the virus from an outsider's point of view, and I could be off base or out of line with this type of view, but it seems to me that the people of China getting a little restless with what's going on there. We'll see how that situation kind of develops over the next couple of months. This is after also Apple dipped on those iPhone production rumors, as it appears that at least 30% of the production is going to be reduced due to that factory unrest in Foxconn. Taiwan Semiconductor Manufacturer, which manufactures the bulk of, I think all of Apple's chips that goes into all of their products, said that they will build advanced chips in their Arizona plant, scheduled to be open, I believe, in 2024. This means that 3 and 5 nanometer chips will be produced here. There might have been some rumors or some thought that they only produce non-advanced chips, stuff that goes into non-advanced smartphones and computers, but it appears that these are the types of chips that will be used in Apple devices. Now, Apple is eyeing a Manchester United. That is a soccer club. It is also a publicly traded company. In a takeover bid, this company is currently, so Manchester United is worth roughly $3 billion. There are rumors that Apple might consider buying the entire club for about $7 billion. And now there might be some confusion. Why is Apple trying to buy a soccer club? I think this is all about the television rights. I wrote an article actually that appeared here on Seeking Alpha just a couple of months ago, talking about the fact that some of these sports rights are becoming so expensive that the companies might actually just buy the teams in order to gain access to maybe some of those profits, but also the television rights themselves. And Apple may be playing that strategy by buying one of the most recognizable teams in all of soccer, and then maybe getting rights to the television on top of that. Obviously, there's merchandise and other types of things, and my guess is what Apple would do would be hire somebody to actually manage the team. I don't think you would necessarily see Tim Cook pulling the strings on what soccer players would be on the field, but obviously a very interesting development. And if they pull this off, my guess is Apple will learn something here. And if they like what they see, I swear, Apple might own an NFL team, an NBA team. They might own multiple of these teams, considering how much these sports rights cost over the next couple of years. Here's that Manchester United stock that just soared this week on these rumors. Moving on to Amazon, started the week at $93 and some change, ended the week basically flat at about $93 and some change. Now, this is after Amazon workers are urged to strike on Black Friday by union advocates. And now I got to be a little careful here. There's always a little someone anyone that is pro-union and pro-worker in the channel comments, but I will remind you guys, this is the investor channel. I don't care about anything other than being a great investor here on the channel. If you want to think about workers, if you want to think about worker safety, if you want to think about worker wages, you want to think about worker fairness, that is for you to decide in your own investment decisions. I would be doing you a disservice if I was trying to pass those opinions and those thoughts on to you. We know as an investment and an investor in Amazon, the workers striking on Black Friday is an absolute disaster. This is why this company needs to continue to improve its relations with its workers, but also start to move away from them using robotics and other types of things that can replace them. Cinema stocks jump after the report of Amazon investing $1 billion or more in theatrical releases. This company, Amazon, I'm referring to, is going to make roughly 12 to 15 movies per year, and then it looks like probably release them into theaters, or at least maybe that's the plan. They plan to release these into theaters. I don't exactly know how that business works, but maybe they don't get into the theaters, or they don't do very well, or they're not highly rated, and then they could probably move over to Amazon Prime. They're going to start with some smaller releases in 2023 and then probably build up to this 12 to 15. That's essentially one a month in 2024. This is obviously on the heels of Amazon buying MGM Studios, not MGM Grand or the MGM Casino, but MGM Studios, which own franchises like Rocky and James Bond. My guess is you could make a movie a year based on just the content they acquired in that acquisition. Now, iRobot, which is a company Amazon agreed to buy earlier this year for roughly $61 per share at about $1.7 billion. This deal, like every deal that these companies do, even small or large one, is going to be investigated by the watchdogs over in the UK and here in the United States as well. Currently, iRobot is trading at about $52 per share, so there's about a $9 delta on that one. And so obviously with this regulatory environment, investors not really sure what to do with these stocks. Now, Amazon is likely to settle a European antitrust probe. This probe related to the fact that you have third-party sellers on Amazon, and then I think the probe alleges, and I believe this is a proper allegation, this is something that actually does happen on Amazon, is the fact that Amazon kind of favors their first party or maybe even certain sellers on its platform and doesn't like have a democratized access to the buy box. And so it appears that Amazon will probably settle here and maybe agree to some terms. This is the type of regulation that I actually like, that the two sides actually come together. They reach some kind of agreement, and hopefully Amazon can abide by that agreement. Moving on to Netflix, start of the week at 288, ended down a little bit, down 1% to 285. This is after Netflix is rumored to hire a high-profile PC video game maker. This is to make a AAA title, at least attempt to do that. A lot of companies try to do that. They don't end up doing this, but this is after Netflix has kind of, dipped his toes a little bit, trying to make smaller mobile games, a little more casual games. This looks like they're trying to make a giant kind of a PC game, maybe even transferred over to an Xbox or a PlayStation as well. We'll see how Netflix is able to do that. I tell you what, this is untapped business for Netflix if they're able to make AAA titles for video games. I mean, we're talking about multi-hundreds of millions of dollars for a company that is worth about $129 billion, so certainly tangible if they're able to pull it off. Moving on to NVIDIA, start of the week at 152. Hello, is that right? 7% gain on this one, up to $162 per share. This is after the EU agreed to a $47 billion plan to fund chip production in the countries of Europe. Currently, the Europe nations just account for about 8% of global capacity. That is down actually from 24% nearly 20 years ago. They're hoping that this funding and maybe encouragement of, NVIDIA, TSM, those types of companies could increase this by 20% by 2030. This is not law yet. It still has to go through the process in Europe, but certainly looks like it has the backing to pass. Moving on to Google, start of the week at $98 per share, ended just down from that to about $97.50. This is after Apple and Google duopoly is under scrutiny. What isn't under scrutiny from these lawmakers? From UK regulators as they launch a probe into cloud and gaming. And this is also related to the web browsers. They say that 97% of all mobile web browsers in the UK either come from Apple or Google. And so they're going to try to figure out a way to maybe extract some money from those two companies based on that dominance. Now, cloud, Google Cloud in particular, weighs scrapping a deal valuing their sales commission. So what this is going to do is maybe restructure how these sales commissions are happening over at Google. Obviously, when you're looking at kind of a cloud product, the sales cycle can be relatively long, and the salesperson involved probably is, has a lot of talent and to able to close large deals with large infrastructure, large governments, those types of things. Well, it looks like to me that the cloud business is probably going to slow in 2023. And so it potentially maybe, or what I'm hoping for as a Google investor is the growth may not be there with Google Cloud, but what we know about this business unit is it's not profitable. From an operating perspective, I'd like to see it turn profitable sometime next year. And maybe one of the ways they can do that is by cutting the sales commissions on the staff. Moving on to Microsoft, start of the week at 243, one of these stocks that's actually up about 1.7% to finish the week at 247.50. This is after we got more regulation here, guys. Activision dipped on a report that the FTC is likely to challenge Microsoft's acquisition. This has long been in the works, but what I thought was interesting is Activision price of their stock just today was down 4%, and Microsoft's was obviously up 1.7%. So we've said it numerous times here on the channel. If this deal doesn't go through, I actually think it's more detrimental to the Activision since they got agreed to sell their company at what is likely to be a far larger investment and valuation than it is worth today. Microsoft would just have to part with about $3 billion, which, to Microsoft is like $3. Now, China's normal procedure, put that in quotes, review of Microsoft's Activision deal may come soon. So all the regulators are lining up on this one. And Microsoft is likely to face an antitrust investigation, not related to Activision, but probably as well, but in the UA for their Teams integration. So that Microsoft Teams product, which is a little bit like Slack and a little bit, I guess, like Zoom as well. Salesforce is alleging that Microsoft has kind of unfairly integrated Teams inside of their Microsoft Office platforms, and Slack says, or Salesforce says, that the EU should make Microsoft separate Teams from Office and sell it at a fair commercial price. So I tell you what, this is the type of regulation that Microsoft shareholders probably really doesn't mind. If they win this lawsuit, well, they get to just integrate Teams however they want, and it's probably a pretty unfair competition to the Slacks and the others that have to charge for this type of things. If they're forced to break it out and sell it on its own at a competitive price, well, that's probably another revenue stream for Microsoft. Moving on to Tesla, start of the week at 174, and like NVIDIA, popped big time this week, up nearly 5%, finished the week at about $182 per share. This is after Dolby Atmos technology. Dolby is also a public company. They are going to feature this, it like surrounds your ears with sound. You can access it with certain types of headphones, certain types of music services, but it appears that is coming to a Tesla software update relatively soon. And this is also after Tesla gained on the South Korea rumors and Cybertruck developments, pushing aside the Twitter distraction. Now, in terms of the South Korea developments, you should have expanded supply chain and maybe potentially actual vehicle manufacturing in South Korea at some point. As it appears, Elon Musk got a little chummy with the government over in South Korea. And also we have Cybertruck rumors. It looks like that product just continues to move closer and closer to likely in the middle half of next year, actually rolling off of the assembly line. It appears that according to a third party, that they have over 1.6 million pre-orders for this truck, or roughly $123 billion in booked revenue for this truck. Now, obviously, the truck has to be manufactured. It has to be made. Also, people have to buy it at the price that is likely going to be a lot higher than the original asking price. This was just a $100 deposit to reserve a Cybertruck. And at the time, I think they had a truck that was priced in the $35,000 to $50,000 range. Now, because of inflation and maybe other features added to the truck, you're looking at a truck that's easily going to cost $50,000 or more. My guess is you're probably looking, after tax and all those types of things, a truck well into the $70,000, $80,000, maybe even $90,000. So we'll see how many people that reserved one at $100 will convert into orders. But I tell you what, you got $123 billion in booked business for a product that's not there, and you've got a $578 billion market cap. Seems to me if that Cybertruck's a hit, well, Tesla's going to be doing pretty good. Moving on to the technical segment of the show, we've got the S&P 500. This one's been on a run. We obviously made these lows back in October, and we have just been going straight up. We would expect this rally to stall out next week, more than likely, okay? We've got just about 1.3% headroom from where the stock market ended today up to a very, very major downward trend line that has been held intact on every stock and almost every index that I've looked at. This is very much intact. If you are of the belief that the Federal Reserve is just going to have to keep the foot on the gas of hiking rates and stocks are just going to make new lows and keep going down and down and down, you better sell within the next probably 48 hours of the stock market being open next week. That's what that chart is telling you. Moving on to Meta. This one's kind of like we talked about last week. Most of these stocks are flat. There's been some changes in like a Tesla and NVIDIA, but we've kind of popped up into the channel. So we've been in this downward channel with the purple line being the bottom of the channel. We obviously, after earnings, broke down, like gap, not broke, just gap down below. And we're back up in this channel. You would expect, if momentum can stay in these markets and they don't get rejected at the current area, well, yeah, you could have a pretty strong rally with Meta up into the 120s, 130s, maybe even as high as 140, even keeping this kind of technical downtrend intact. Certainly keep an eye on that when it comes to Meta. Moving on to Apple, not a whole lot of change. Obviously, when you go flat week over week, you are making a series of lower highs. We're talking about kind of the micro trend, but you're also making higher lows. So you're looking for this to be resolved, I would assume, next week. You're either going to break above these two areas or come close to these two areas of resistance. You would break over 150. If you break decisively over 150, 157, 160, very much in play for Apple. If you break down, the area we're looking for is probably about 137. That would be an area of support, but also supported by these higher lows. Be an interesting technical area to accumulate Apple on the dip. Moving on to Amazon. It's just hanging out in the middle of our green box. We have this green box marked out for a long time on Amazon, between about $80 up to about, we'll call it about $100 per share. It's obviously almost right in the middle of that at about $93. This is where you can accumulate these shares. Just understanding that this is a very, very, very steep downtrend and a down channel that this is in. Even if you pop up here to $100, $103, $105 per share, it really doesn't mean anything. You really need to get probably over 110, even 115 on this stock to really start to look like you're breaking out of this channel. And even if you do that, you're just kind of shallowing out this channel. Really, with Amazon, this is what I'm kind of excited about this stock, at least in the shorter term. If you keep momentum in these markets and it's not as bad as what people think, you could have like a 40%, 50% rally up to this, really just up to the key area of resistance up here about 140, 150 on this one. Again, that is basically a 50% move on Amazon. Moving on to Netflix. I think people think I'm in here cheating, but I'm not. These are the charts that we had drawn last week. Look at these purple lines. The stock is just following this technical pattern beautifully. We're walking down this purple line now. I would expect if the momentum stays out of this name and even the markets, we should retest down here at about 260 on Netflix. If this pattern holds, you're buying it at 260 and you're watching it walk up north of 280 and probably taking profits there. Moving on to NVIDIA. This one is reached our top end of the channel since basically this time last year. That has signaled a great time to sell NVIDIA. If it is able to pop its head up over this, you would like for a move over 180, and I would actually expect that as soon as next week if the momentum stays in this name. That is certainly possible. I think based on this technical pattern, more probable as this name gets rejected. The first area of support, really clear area of support, is probably 140, lower than that, about 127 on NVIDIA. Moving on to Google, clean this one up just a little bit. This one, very similar to some of these stocks, just had this massive sell-off and then has kind of bounced back, and now it's just hovering here. There's an area of resistance right over this at about $100 per share. The stock just cannot get over $100. Over the last couple of weeks, you've got a ton of candles kind of in this $100 range. So with Google, really, you're just hoping that it pops up above that. But even if it does, let's imagine it goes to like 106, 107, you're still just in this downward channel. That's just what we're waiting for. And some of you that are still on the sidelines, you're not willing to get in now, looking out into the future. You're not willing to dollar cost average at these levels. Well, you know, you could wait for the Fed. You could wait for somebody on CNBC. You could wait for somebody here on YouTube to tell you. I would just be waiting for these technical channels to start breaking. So you're looking for a large breakout above. Even if you break out above, it wouldn't be something I would chase, because you're going to come back and likely do a back test to the top of the channel. Very similar to what we've seen with Netflix. Okay, you break out to the top of the channel, you come back and back test it. So that is what we're looking for with these stocks. And at some point they'll materialize, whether they happen, really as soon as next week or the following week and sometime in December. We are waiting to see that. Moving on to Microsoft's holding up here. We've got this middle channel line. I'll make it a little bit thicker, and then maybe we'll change it to like an orange color here. This is kind of the middle of the channel, and this is just I love these technical setups that have like a well-defined lower channel, well-defined upper channel, but then there's also a well-defined middle channel, and we're still above that. So Microsoft could technically continue to work up this channel. If it does, you've probably got another like 3.2%, but then again, like the S&P 500, like several of these stocks, you're at the top of the channel. You would expect, based on the pattern that we've been seeing all year, you would at least come back and backtest the middle of the channel, if not all the way to the bottom, retest new lows on this one. Obviously, this is actually the probable outcome. We're actually expecting these stocks to all hit the top of the range and then pull back, make newer lower lows on Microsoft, which would take you south of about 210 on this one. Whether or not that materializes, I'm not sitting here saying that's what I'm going to go short Microsoft next week. It's just what I'm going to be looking for, and if it does something different, that will be very, very interesting. Moving on to Tesla. Now, this one's been in the micro trend, obviously, very much in a very steep downslope of a trend. Now, it has started to find footing. There is an area of support here at about 180, and you can plus or minus, I would say, with Tesla, like a good 10% on that one. But the stock is trying to hold this level, because if it doesn't hold 180, you are going to stay in this channel and you're going to test probably south of about 140 on this one. If you can reverse, and we're looking for a reversal with Tesla as soon as next week. That's why last week's video, I think in the thumbnail, I said, 50% rally with Tesla. It's possible, okay? If this 180 level holds and you rally to the top of the channel, you're simply just confirming exactly what Microsoft has done, exactly what the S&P 500 has done really over the last couple of weeks, exactly what his NVIDIA has done. You could potentially do that with Tesla, and that would be a 40% rally, a 47% rally on this one, simply just confirming that a downtrend is there. That's why these high volatile stocks can be very exciting. You just have to have the discipline to take profits. I certainly, even though I'm very bullish on Tesla, I really like the fundamentals. I like that they're profitable, they're debt-free, they're cash flow positive. I like their vehicle margins. I like their future products as well. I think that Cybertruck is going to be a winner, but I tell you what, you get a 47% rally on this one, maybe in December, in January. I will take a portion of my profits from that, because what we would expect from a 47% rally with Tesla would likely to give it almost all back over the next several months. We'll see how those things materialize. We're kind of in a holding pattern from a technical perspective. We're monitoring to see if Google, Microsoft, these types of companies, can they break to the top of the channel? Can an NVIDIA break out over the channel? Can Apple decisively pick a direction and go one way or another? Can Meta go from the bottom of the channel to the top? That is what we're going to be watching very closely into next week. So we'll definitely be here next week on the FAANG Stock Recap Show to recap those events. Hopefully you guys have a wonderful weekend out there. Enjoy yourself, and we'll see you again next week. Good luck with your investments.